Good evening, good evening, everybody. How y'all doing? Y'all got to excuse me. I'm in the middle of eating, but I had to go ahead and get on here because I got a lecture I gotta do tonight with the gang at 7. So gotta get right to it, man. What's going on, everybody that's pulling up? If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbit, still want to say welcome. But I want to give you a nice hearty. Well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just Big Spot if you don't hablo español. And you are in tune to another episode of The Intraday Price Action Recap. Hey, man, how y'all doing today, man? I hope y'all had a good day today. I hope y'all been having a fantabulous trading week. Shout out to everybody that's pulling up, man. Shout out. And put it on full screen so I can chew without y'all seeing me. Shout out Deborah over here in the Discord, man. Shout out Jim over there in the Discord. Discord light tonight. Let's see who over here on the tube. I see Hitler and Michelle over there on the tube. I see Felicia on the tube. What's going on? I see Kim on the tube. I see Honey on the tube. What's going on, Honey? Hey, man. Them all the names I see. I see more numbers than I see names. I see Lump in the Discord. I see Vernon over there in the Discord. What's happening, man? How y'all doing, man? Hopefully y'all day is going well. Going well, going swell. Again, tonight is going to be the first monthly lecture for the Diamond Group. First monthly lecture. We are going to be talking about breakers and fair value gaps. Breakers and fair value gaps. This lecture is being brought to you by, I think it was Jada. Let's see here. Lecture suggestions. Yes. Jada. Jada asked for trading breakers with fair value gaps. Oh, that's what we're going to be talking about tonight. And if you don't know, the monthly lectures will be the first Wednesday of the month at 7 p.m. The first Wednesday of the month at 7 p.m. are the monthly lectures. Now, let me get all this stuff in order, and we're going to get right to it, man. If you got a question or something you want to share, and you're in the Discord, just unmute. Holla at your boy. If you're on the tube, drop it in the chat. If you're on the Talk of the Ticks, drop it in the chat. All right. I can't see my YouTube. Oh, hold on. Okay. All right. Now. There we go. Now we're cooking with Crisco. Was in the store yesterday, and my youngest boy, he was like, we walked past the Crisco, the cooking oils and stuff. And he was like, man, I never knew Crisco made cooking oils. Now I understand why you always be like, now we cooking with Crisco. You're like, I never knew what you meant when you said that. You're like, nah, it makes sense. So, let me turn my fancy dancy on. Man, I just looked over at YouTube and I noticed y'all can't see that wick right there. There it is. It popped in. All right. What's going on, Marco? Hey, let's get to it, man. Today, who was on the live stream with me today this morning? Anybody in here was on the live stream with me this morning? If you was, drop it in the chat or unmute and let me know that you was here. Who was on the live stream this morning? Tape reading session with me this morning?
Here.
I was there.
All right. So, remember what we talked about this morning when I was like, when I got low expectations, or if the market's showing me seek and destroy or high resistance in the morning, what did I say I typically do if I want to trade?
Wait till the afternoon.
Yes. Wait till the afternoon. Let's go over here. Mark this out to the 130. Right, 130 right down. That right there is the start of the afternoon session. Right? During that London close. Right? We see that London close time frame went crazy. Right? Remember we was talking about for the London close time frame. Right? We come from 10. Right? In this case, the high is right there at 10 o'clock. All right. We've been going primarily down all morning. Okay. We was going primarily down all morning. Took out sell side there. Right. Then we came and took out short-term sell side that we had made. Happened to trade into an order block. And then during that London close time frame, what do? Attack that high that was made during I'm back, y'all. That was made during that 10 to 11 time frame. And then once we took that out, traded back down. Right? Retraced back down. Failed to get this sell side, but we did retrace back into the order block. We didn't trade back below that sell side there, but we did come back. I said order block back to the fair value gap. I mean, we displaced up, going up, taking out that buy side and setting relative equal highs with the day. But the afternoon session, as we said, turned out to have cleaner price. Right? If we look at the morning session, man, somebody's slumping, got my whole desk vibrating. All right, if we look at the morning session, complete a doo-doo on these 15-minute candles. Look at that. Nothing but overlapping candles. Nothing but overlapping candles. From 9:30 all the way over until like 11 o'clock. And then at 11:15 we finally push outside the area and then start doing that London close run on liquidity, right? So I didn't get a chance to trade the afternoon session because I was busy running errands and doing a few things around the house. All right, that's why I ended up eating now. I didn't eat lunch. I was just eating right when I logged in right here. But in the grand scheme of things, right? Looking at today, what type of day was today, right? we're trying to train our eyes to see the higher time frame, even when we're not looking at the higher time frame. That's why we mark out key levels and key PD rates so that we can keep up with the higher time frame. Right? What's going on, Rhonda Green? What type of day was today? Looking at the price action. Right. This is the opening price right there for today. What type of day was today? Any takers?
Not a consolidation.
Yeah, you can say that. You can say that, but it ain't. You ain't got to go that deep. You ain't got to go that deep, Marco. It's something real simple.
Open, low, high, close.
You ain't got to go that deep. That's the same thing Marco said. You ain't got to go that deep.
Okay.
It's something real simple.
B.
Huh?
That was Miss B that said. That was me that said that. The first one.
No. Marco, he
Did somebody say power of 3?
You ain't got to go that deep.
Oh, okay.
Real simple. Real simple. It's staring you in the face. Go to the daily chart. Maybe it'll be easier for you to see. Now, can you see it yet? See it yet? See it yet? There you go, honey. There you go, honey. There you go, honey.
Did she say inside day?
Yes.
Okay.
Inside day. Want to train our eyes to be able to see this stuff. Uh-oh, I'm sorry. I didn't mean to do that. I was on the wrong screen. Right? You want to train yourself to be able to see this stuff when you're on the Lord. That's the purpose of marking out key levels. Right? This right here. This is yesterday's high. This is yesterday's low. This is the opening price for today's trading. Right? Where did all of today's trading take place? In between yesterday's high and yesterday's low. Right? So that gives you what? An inside day. Right? You want to be able to, you want to start to train your eye. Excuse me. But I Sam's Cola came back with a vengeance just then. Sound like I was getting exercised up in here. But you want to start to train yourself to see things, see the higher time frame, even when you're on a lower time frame. That'd be the purpose of like zooming out. When you zoom out and look at stuff, you're not zooming out just to look at more candles. You're zooming out to get a higher time frame perspective, right? Because what does the lower time frame give us? The higher time frame gives us what? What does the higher time frame give us, and what do the lower time frame give us? The higher time frame give us what? Huh? Narrative. Very good here to learn and share. And the lower time frame gives us what? Detail. Very good. Shout out to everybody pulling up with the hard hitting answers. Here to learn and share was the first one I saw. But shout out Marco. Shout out Kim. Right? We go up for narrative and down for detail. Right? So if you go up and you see that, hey, the monthly time frame is bullish, right? But we just came into contact with a significant buy side liquidity pool, and there's a bullish PD array below us in price. So it's bullish, but I'm anticipating a retracement. So you're anticipating a retracement, so you start to drop lower, looking for detail in the lower time frames to see if the algorithm is showing signs that it wants that retracement to play out. So that's why you go down for the detail, because on the monthly time frame, it may not be crystal clear that a retracement is coming. But if you start to go down to the weekly, to the daily, to the 4 hour, to the 60 minute, to the 15 minute, to the 5 minute, to the 1 minute, even sub 1 minute. You start to see more and more detail play out, right? And while you're on these lower time frames looking at the detail, that's when you start to see a plethora of the ICT concepts playing out. The lower you go, the more examples of the concepts you see playing out. The more buy programs you see, the more sell programs you see, the more market maker models you see, the more breakers you see, the more order blocks you see, the more fair value gaps, the more rejection blocks, the more everything, the more swing points, the more open, high, low, close, the more everything, the more changes in the state of delivery, the more inversion fair value gap. You see more and more and more stuff the lower that you go, right? In lies the problem with us day traders, because we see so much on the intraday time frames. We feel like we have to do so much. We feel like we have to trade so much, but we don't. All we got to do is understand where is price trying to go. And if you don't know where price is trying to go, it's okay. It's okay. Because if you don't know where price is trying to go and you understand the concepts, 9 times out of 10, the market is just engineering liquidity and you're supposed to be sitting on your hands anyway. Right? But we get caught up in wanting to be everyday traders instead of day traders. We get caught. We get so focused on being everyday traders, because what are we thinking about? Oh man, I made $400 yesterday. What if I make $400 every day? If I trade 5 days a week, that's $2,000 a week. I can quit my job with that. $2,000 a week is good money. If I could get $2,000 a week, if I add more contracts, I could get $4,000 or $8,000 a week. Oh my God. That would change my life. And then we try to force something every day. Apex got an 80% off sale again. Let me use Tim Link and go get 5 Apex accounts, get 5 $1,000, $100,000 accounts. So I could be like Empire Trades and say, Tim, I got 5 $100,000 accounts. And then we just force this stuff, man. We're not everyday traders. We're traders, right? We watch price action. We look for signatures. We execute when the market is giving us high probability scenarios, right? When we was on live stream today, we was reading price action. We said, hey, this look fishy. Me no like it. And then the market went into like a seek and destroy, right? It went into seek and destroy. And we're like, hey, me no like it. Then when it started trying to get out of the seek and destroy, it started showing signs of high resistance liquidity runs, not really giving nothing clear as far as sticking to what the algorithmic signature is supposed to be. It'll start showing signatures, then all of a sudden switch gears. Showing signatures, all of a sudden start switching gears, right? And there's nothing going to teach you how to do that besides just doing that. Seeing the signatures. You got to sit down and watch them candles print. Right? And while you're watching the candle print, you want to remember everything that we discussed when it comes to the concepts. Again, don't try to use everything. Just remember everything. And when I say don't try to use it, don't try to use everything to trade. Right? Remember everything so that when you're seeing the price, what price is doing, you understand what price is doing, right? You understand what price is doing. Now, Tim, what in the world are you talking about? What they 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 talking about? Sound crazy when y'all say the first part. Y'all supposed to say, ain't talking about nothing. Ain't talking about nothing. Ain't talking about nothing. Ain't talking about nothing. So now when I say what they talking about, y'all say ain't talking about nothing. What they talking about? What they talking about? What they talking about? What they talking about? I bet y'all ain't see
I ain't talking about nothing.
it. I know Sherwood said it. My buddy Sherwood said it. All right, so let's go here for a second. Right. We see here, you see right there, I got this is still left on the chart from this morning when we was reading price. I deleted a lot of other stuff, but that 5-minute fair value gap, that high and that low, that's our opening range. That's our opening range. That's the highest high and the lowest low of the opening range. And that's the first presentation fair value gap on the 5-minute time frame. That's the only thing that's still left on the chart from this morning when we were watching price. Right? So let me drop down real quick to a 1 minute, and I'm going to put the 1 minute first presentation on there because that's something that we was talking about. I think it was right here. Yes, it was. All right, yes, right there, the 936 candle. Right, that's the first presentation right there. See, make sure 930. Yep, 936 candle right there. Yep, because they overlapped. That's it. And it was bearish. First presentation. Right. That's the 1 minute. M-Wizzle Manizzle. So that's the M1. That's the M5. Right? M1, M5. We're going to stay here on the 1 minute time frame. Okay. So, let's highlight the 9 from 9:30 to lunchtime. 9:30. We'll go 9:30 to lunchtime. All right. So that this red shaded area here, that's the New York session from 9:30 up until lunchtime. Okay? So zoom out just a little bit. We see that coming into this session here, right? Coming into the session. We had some short-term sell side there, and then we had relative equal lows resting over here, right? Relative equal lows resting over there coming into this session, right? This was a low from yesterday that we talked about. We said there was a afternoon low that we hadn't touched. We looked at, some divergence and stuff like that. That's the afternoon low that we were saying we hadn't came down there and touched. It was a relative equal low, right? So this right here, I think this right here was afternoon, and this was like during lunch right here. So that was the afternoon low that was during lunch, but relative equal lows over there, right? Nonetheless. Okay. And then when we opened up, we see that we're well below all of the overnight price action. Are we well below? Not quite yet, not yet, because we opened here. Let me put the 930 open on there so I can see exactly where we are. All right, 930 opening price. Let's make it fat. We'll make it kind of fat. Like that. 930 opening price. Okay. So at 930 open, we're below all of this sales. We're in this sell side liquidity pool right here at the 930 open, because this is where we open up right there, right? So we're already down there inside the sell side liquidity pool when we open up at 930. Now, when the 930 bell goes off, right, It's kind of lackluster in the beginning here. So then when we get here at 9:36, we take off and engage that afternoon low, creating a SIBI right there. Right now, going into any new thing, right? What's the first thing that we anticipate going into any going into any new thing?
Manipulation.
We anticipate manipulation going to anything, right? So as we go into, right? So we see here throughout the night, price has been in a sell program, right? That's another thing we talked about. Prices have been in a sell program all night long. We consolidated, you know what I'm saying? Now we coming down. We've been in a sell program for a while now. So coming into 9:30, we come down and go straight into the sell side. So now, if we're anticipating manipulation, right, and we engage the sell side, now right here, you want to be careful. And before you just say, okay, this is manipulation, what do you want to, what signature are you well, give me a signature that you're looking for to let you know that, hey, this probably is manipulation. Because it ain't just one, but give me a signature you would be looking for to let you know that is this manipulation, because we've been in a sell program all night pretty much, and then we open up and we immediately attack the sell side, right? Because if you want to see the sell program continue, you want to see it manipulate out highs first, because the best setup's going to come from when you manipulate out the opposing liquidity first. But when you engage the liquidity in the direction of the bias, the program you're in, buy program, sell program, the draw, whatever, when you go toward that liquidity, right, and you anticipating, hey, we coming into a new session, I'm anticipating a possible manipulation. Somebody give me I'm still waiting. Ain't nobody gave me nothing. I don't see nobody typing nothing. Ain't nobody said nothing. Somebody give me a signature. That just one signature you'll be looking for. Yep, pick one. If you want to give me more than one, that's fine. But pick a signature you'll be looking for to let you know that, hey, this is possible manipulation. Nobody?
I'd want to see how it interacts with that fair value gap that it just made.
What you want to see happen to see if it's manipulation? Give me a little bit more. We got here to learn and share in the chat with a Judas swing. Shout out here to learn and share. That's something you want to see. How you want to see it react with that fair value gap?
Well, I want to see whether it respects it or inverses it. The 1 minute that it just created.
Okay, so if you're anticipating it to be, if you're anticipating this run to the sell side to be manipulation, right? What do you want to see? You gave me two different things there. What do you want to see if you want to see if this is going to be manipulation? I get what you're saying, right? You're playing it safe. You want to see if it respects it, or if we get an inversion. But if you're anticipating it to be manipulation, what do you want to see with this right here? That's what I'm asking. What signature do you want to see?
I'd want to see it inversed.
Yes, you want to see it become an inversion fair value gap. Very good. Very good. Shout out Jim, pulling up with the hard hitting answer. All right. So if we're anticipating this move here to be a manipulation move, right? You want to see, right, the market start to give you inversion fair value gaps if it's creating bearish fair value gaps on the way down, right? So we get an inversion fair value gap right there, right? We get a change in the state of delivery right there. We get a Judas swing right there, right? We get all of these signatures that says, hey, this is manipulation, right? And then once we get these signatures, right, not only do we get the signatures, right, another signature we get a bullish fair value gap with an expansion candle there, anticipating, because we got one breakaway gap there, then we got another breakaway gap here. Price is steady pushing up off of there, not showing a willingness to come down, but then instead of coming to the relative equal highs up here, right? I used that one because that was the highest one, but you could have just picked, you know what I'm saying, the ones that's really close together, these down here. But I just came up to that one there because that's the highest one in the stead. Instead of coming to the relative equal highs here, price stopped and then came back down to the lows right there. Now, looking at how price was trading right here, right here, this is just 3-minute candles, right? This is just 3-minute candles. Somebody that was on the live, when we got over here to this third candle here, before this red candle printed, when we got to, by the time we got to this third candle right here, what do we say about price? What do we say right here? By the time we got to this third candle, what do we say about how the price action was trading? Do anybody remember?
I think we said it was seek and destroy because it was taking liquidity on both sides.
Not yet. We didn't seek. We talked about the seek and destroy after we came back down here. Right? After we came back down here, this is when we said, hey, what kind of day is today? It's thus far, after we came back down here to this area here. But when price was right here, right? Let's do it like this. Just like that. When price was looking just like that, after we printed that third candle right there. Do anybody know? Don't nobody remember? Honey, what about you, honey? You remember? Who else was on there this morning? Miss V, were you on there this morning? Were you on there this morning, Miss V?
I think you said that you didn't like it because it seemed like we were sort of going back and forth and not
Exactly.
really trying to go anywhere.
Exactly. This right here. That is not algorithmic based off what price was doing. We literally said price is doing too much. Hey man, price doing too much right now. It's supposed to be this right here, this move here, giving us a change in state delivery, giving us a break in market structure, giving us a Judas swing, right? When we refuse to come back into that fair value gap on this candle right here, this candle right here should have been getting up out of here because this we moving. Price is very, very bullish, right? It's very bullish. We've opened up, right? We came down. Okay, we got a break in market structure, Judas swing, and then this candle here trades back down below the opening price, right? And then we start to move away. But then all of a sudden, right, we start dilly-dallying, right? We start dilly-dallying. Now, we had 9:45 news, right? Forgot all about the 9:45 news, right? I remember the 10 o'clock news, but I forgot all about the 9:45 news. So we had news at 9:45, and we had news at 10. So instead of going up and attacking the buy side that we was watching, I don't know where my line went. I know I marked out that buy side. Did I delete it? Did I delete that line? Oh no, there it is right there. It's just fat. It's a black line. Oh, okay. That's why I was messed up. All right, let's do this right here. Okay, so all right, so let's find a 9:45 candle. All right, so 9:45 right here, and then 10 o'clock. Right there. All right. Okay. So right here, like, hey man, price doing too much right here because we should be going ahead and engaging with that buy side right there. Again, as we talk about when price does certain things, like we said here, we opened up, we were anticipating manipulation, right? Price immediately attacked the sell side. Price has been in a sell program. So since we didn't manipulate up, right, and we immediately came to the sell side, now we want to see if this is going to give us a Judas swing. We want to see if we're going to create an inversion fair value gap out of this first presentation, right? We're not looking to sell off of it because it's just opening up and we're anticipating manipulation, right? So we get the confirmation by getting an inversion fair value gap over the first presentation, right? We get a break in market structure, giving us a Judas swing, right? We got 1, 2 breakaway gaps, and then just as we're getting ready to go, price starts to dilly-dally, right? Now the news comes out here at 9:45, right? So when the news come out, price drops all the way down. We like, yep, knew this looked fishy, knew this was dilly-dallying, forgot all about the news now, but we just knew this looked fishy, knew it was dilly-dallying, so getting ready to come into that news, what did they say? Hurt! Stop! I ain't finished yet, right? Because price was going. As soon as we get ready to come into that news, hurt! Stop! I'm not finished yet, right? So when the news came out, right? The news came out and they said less jobs, whatever they said. They said something about some jobs, right? Price dropped down. Was it jobs or was it ISM? ISM. I think it was ISM this morning. Right? Whatever it is. I don't want to guess. Let's go and look and see. Let's go look and see. I don't want to guess. All right. So 9:45, yes. PMI. So we had PMI final numbers was today, right? And then at 10 o'clock, we had factory orders and ISM, right? So we had ADP at 8:15. That was the less jobs, right? They had less job openings. That was at 8:15, right? That's what I was thinking about. 9:45, it was PMI, right? The PMI numbers, producers, manufacturers index or something like that. It's called this one right here is purchasing managers index. They got another one called producer manager something, but this one right here was purchasing manager index. There's so many different PMIs and all that right there, right? So this one was the purchasing managers index, and then at 10 we had factory orders and ISM numbers, right? The Institute of Supply Management Surveys. That's what the ISM numbers is. You can read about it to see exactly what it is, right? Who cares? Now, so 9:45, news getting ready to come out. Stop, right? Right there, it showed us something. It's not doing what it's supposed to do. Me no like it, this price action. This is not right, right? So then it start to drop all the way back down, repriced all the way back down into the lowest imbalance in this run after giving us this Judas swing, right? Now that it's giving us a Judas swing and should have gone up, now it traded all the way back down, right? It traded all the way back down to the lowest imbalance, then pushed back up to the high of that same. Now it's a reclaimed fair value gap, but we trade all the way back up to the high of it, right? All the way up to this SIBI right here, right? All the way back up to that SIBI right there, and then we drop down and take out the sell side. So right here at this point, right there, we said, okay, not only do I not like this price action, now this price action has shown me something. It's shown me something very specific. Now, Jim, what did we say about this price action when we took out this low? It just showed us something very specific. What did we say it showed us?
Well, that's when it said it was seek and destroy.
Seek and destroy. And for those who don't know what seek and destroy is, at 9:30 we came in, took out sell side. Went back up, took out buy side. Came back down, took out sell side. Went back up, took out buy side. That's seek and destroy. Seek and destroy is when you're going from liquidity to liquidity, liquidity to liquidity, liquidity. High resistance is when you're got deep retracements and overlapping candles, but you're only taking one side of the market. You're only either taking sell side and having deep retracements up, but not taking the buy side, or taking buy side and having deep retracements down, not taking out the sell side, right? That's the difference between high resistance and seek and destroy. Right, so now once we identify, hey, this is seek and destroy, because we took sell side, we took buy side, we took sell side, right? Before we even came back and took this buy side, we was like, hey, this is seek and destroy. And then once we came down here, now mind you, we come down here and we reject off the low, saying, hey, it's might be good to go back up to the high that sent us there. Right, then we get the Judas swing and all of that right there. And then we come down here, but we don't reject off the low. Matter of fact, we create a SIBI going through the low, right? So we got a bearish break in market structure coupled with a fair value gap, right? That's a very bearish signature right there. Very bearish to get a market structure break this low, took out that high. We come down, we got a bearish break in market structure right there, coupled with a bearish fair value gap. That's a very bearish signature, right? We're in the middle of a sell program, and we get a very bearish signature right here. But what happens when the news drop? Now, mind you, we come up here, back to the bearish order block. You know what I'm saying? Reprice the whole SIBI, traded back up into the bearish breaker, right? Come down, close below that old low, right? Well, close below the older low, because it's lower farther back than that one. And then it just stops. Why? Because news getting ready to come out at 10 o'clock. Soon as the news come out, boom, shoot back up and take out the buy side. Shoot back up and take out the buy side right after giving a very bearish signature, right? Confirming that we just said, hey, this is seek and destroy. Then the algorithm comes out and manipulates all the way back up to the high with the news candle, with the news release. Boom! Blast off. Take out that high, confirming the seek and destroy. Right? So when the algorithm came up, made relative equal highs with the sales, the buy side that we were anticipating here, right? When the market was right here, we was anticipating engaging that buy side right there, but we stopped it at the news, traded back down, dropped down, took out the sell side, and then chilled out without dropping lower. Then the news came out again, shot back up, and took out the buy side, confirming the seek and destroy, right? So there's all kinds of ways to look at price, and it's not just to say, hey, when can I get in? You also want to be able to look at price to say, hey, I need to stay out. All right? You want to look at price, say, hey, I need to stay out. Because this right here, this is not algorithmic. Right? The algorithm is giving me signatures, but then it's ignoring them. Giving me signatures, ignoring them. Right? That's not algorithmic. That's manipulation. I want to stay out until a later time. Right? And then we already talked about in the with the London close reversal run back on liquidity. Right? That's the high right there created at 10:06. Right, start at 10 o'clock coming to the right. Right, start at 10 o'clock looking to the right. That's the first swing high we get to that hasn't been touched yet. Right, going into the London close time frame. Right, come back, attack that liquidity right there, and then the rest of the afternoon was looked like it was relatively smooth. I didn't trade it, so I can't say if it was smooth or not. I didn't even watch it, but that's it, man. That's all I got. I got to get ready for this class in like 10 minutes. Does anybody have anything for me? Do everybody understand what I was talking about when I said you want to be able to identify signatures so that you can choose to engage or not engage price? We're not everyday traders. We're traders that watch the price action and we engage when we see high probability scenarios. So you want to be able to understand what signatures you should be looking for so you'll know if the conditions are high probability. Right? So that's why we walked through the price today. Look, today was it was seek and destroy day. I'm pretty sure some people got smacked around. Right? When the market started dropping, right? What happens? Right? It's going down into a discount. Anybody that's been short making a whole lot of money. Guess what they're going to do? They're going to sell it to you. You're going to be their exit liquidity. Why? Because you chase. You out there like Forrest Gump. You chasing price. You chasing price. And you're going to be their exit liquidity. Right? Don't be their exit liquidity. Don't chase price. Read price action. Study price action. Learn to identify those signatures to let you know when I should and when I should not be engaging. If you don't understand everything, that's fine. But the things you do understand, if price does this, then it should do that. If price do something and it don't do the next thing, that's not algorithmic. That's manipulation. Ice D, they won't trap me. Hey, nothing. All hearts and minds clear. Gang. If you're not part of the gang, if you want to be part of the gang, there's a link to join the Discord in the description. Right? Check it out if you want to be a part of the gang. How would you handle your emotions after a loss when your trading plan didn't work? I talked about this before, all right? You get emotional when you don't understand your trading plan. You get emotional when you don't understand your trading plan. You get emotional when you're just guessing. If you have truly vetted your trading plan and you know the probabilities of your trading plan, then you don't get emotional about losses and you don't get emotional about winning, because you already vetted this trading plan. You've done the work. You've back tested it. You forward tested it, right? You know this trading plan like the back of your hand. You do the same thing every time. You don't try this, then try that, and try this, then try that, and try this, then try that, and try this, then try that. No, you're doing the same thing every time, and you understand this trading plan. So when it doesn't work, you know why it didn't work. You know how to go back and look and say, man, I missed that. Or I just got caught up. I just got caught up in a seek and destroy day. So you don't get emotional about it. If you get emotional about losing, if you get emotional like on a seek and destroy day, if you get emotional when you get knocked out and then it still goes to your target, you don't truly understand your trading plan. Right? That's where the emotions come in. When you don't understand your trading plan, you're still guessing. Right? You're still hoping that it hits your target. You get in, you worried about your stop loss. You worried about your profit target. Man, I hope I don't get stopped out this time. You don't understand your trading plan. That's why you get emotional. So if I get stopped out, let me see what you said. You said if you get stopped out when your trading plan didn't work. After a loss, you say stopped out. After a loss when your trading plan didn't work. If you get emotional about a loss, you don't know your trading plan. You don't have a trading plan. You're still experimenting. You're experimenting and you're not and this is what you do. You don't go and get a new trading plan and then start trying to trade it tomorrow. Right? When you come up with a trading plan, right? You want to back test that trading plan to see how effective is it, and back test it going through as many different market conditions as you can so that you understand how effective it truly is. And then you want to sim trade that trading plan to see if it's still effective in current market conditions. And then once you do that and you move into using live funds with it, you got all your data that says 7 times out of 10, this is going to yield me a win. Right? I'm not going to be letting my losers run and cutting my winners short because I'm afraid it's not going to hit my TP. I understand this model. Right? But you don't just see a new fancy model on YouTube and be like, hey, I like that model. Then I'm going to try that tomorrow. Nope. Ain't nothing wrong with trying different models, but you want to vet it. You want to vet it first. Right. Make sense? All right. You're welcome. I got 3 minutes. Anybody got anything else that I can answer in less than 2 minutes? Nothing. Nothing. All hearts and minds are clear. Gang. People in the diamond tier. People in the diamond tier. If you look inside the diamond chat, right, there are 2 links right over here inside. Down here, it says Diamond Chat. If you look inside there, there's 2 links. There's a Zoom link There's a YouTube link. Pull up on the Zoom link. Right? The YouTube link, and hey, for the people who like to watch it on their TV, the link is there. You know what I'm saying? That's for the replay also. But pull up on the Zoom link so that we can interact if you got questions. All right. We're not going to do a lot of teaching about what the breakers and the fair value gaps are. I told y'all what the prerequisites was coming into this lecture, right? We're pretty much going to be focusing on how to trade with them. Right now, I can honestly say most of the focus for tonight's lecture is going to be pretty much towards the breaker, because the breaker has, there's different ways you can trade it, like more advanced ways, more beginner ways. There's different ways you can trade the breaker, right? And we want to get like the full understanding of trading any PD array, not just the breaker and the fair value gap, because everything starts with what? It matters not the PD array. What does it all starts? It's all led by what? What? Somebody tell me. It matters not the PD array. What's more important? You have to understand the... Nobody's gonna...
Order flow?
Yeah, order flow, but the narrative is all about the narrative. The narrative drives everything. And it's 7 o'clock, so it's time to go. Narrative drives everything, and time is king. All right, till the next time I decide to get on Algo's internet and share my thoughts on this thing they call price action. It's your boy Aranya Grande. That's just Big Spot if you don't hablo español. Y'all be